investing scenario, and how is at Green Portfolio on the business front? How has the culture changed from when the journey has started and right now?
So as I already mentioned that we are seeing business
investing
growth.
Scenario, and how is at Green Portfolio on the business? Yeah.
Okay, so I had this YouTube open in my laptop, so I thought why you are repeating. So business is growing, like we never anticipated. Uh, it is, it is reflecting the economy. I think the economic fundamentals are so strong, and the economy from here, uh, we are estimating that the economy will grow of the lights that the China has seen in the decade 1990. So they grew at a double-digit rate continuously for 10 years. Even though it will not be double digit for India, but still 8% is good enough. And I think we will see a consistent growth in years to come. So we are seeing a lot of excitement out there in businessmen, and everybody's expanding capacities, and everything looks very good for India.
Got it. Before we begin, we have Mutanna PM, who says hi. Hi, Mutanna. Hope you have a very good evening. And let's talk more about the budget. So before we start, I would like to introduce today's guest speakers. We've done videos before, and I hope most of you who are watching wouldn't need any further introduction. But even though, for those who don't know, today's guests are Mr. Divam Sharma and Anuj Jain, the founders of Green Portfolio, one of the best fund managers in the country right now. So glad, so honored to have you both today on the smallcase platform to talk about the new budget. Thank you so much for coming in. Thank you so much for joining in. How are you guys feeling? Divam, I would let you go first.
Thank you so much, Abel, for this great introduction and hosting us again. It's a pleasure as always. We are doing great. It's, I think, so far so good with the budget, especially yesterday. I feel that it is an amazing budget for long-term growth of India and the stock markets and investors. So I'm really elated to be here post the budget talking about it.
Thanks. Anuj?
Yes, thank you, Abel. It is always a pleasure to to be with you and the smallcase team. And it is very exciting times, as I already told that we see a lot of excitement not only among investors but among the businessmen also. So I think it is a very good time to learn and invest and stay invested.
Got it. Thank you so much for being here. Now, before I start, so Angelina Smith says hello. Hi, Angelina. And so before we start, I had this very interesting question because so now with the social media boom, and once the budget came up, there are a lot of memes on the new budget. So most of the memes that are coming out are from the standpoint of normal everyday users. Maybe they don't have a lot of context about the budget or the greater implications that it has. So keeping that in mind, do you see some of the memes and go like, oh my God, what's happening? I mean, they don't even know what they're talking about. Or do you sit and laugh with it? Or sometimes do you agree with it? What is the fund manager's perspective on funny memes that come out relating to the stock market or even the budget in this case?
See, I think this is really interesting question. Today morning I went to a barber shop, and that guy was didn't knew anything about the budget, and he was just talking about some cash being found by our CBI in Noida today, and some cash being found in Kanpur recently, and he was just like that one bad person has hoarded cash, and that has been confiscated and is going to another bad entity, which is the government. So a lot of the people actually do not know what the government, that the people know that government is taking taxes, that the economy for people at ground uh, is not that great with COVID, but they do not really understand what the government is doing and what is the intent, and that this is the case with every government, right? You have certain income as a government, and you have certain expenditures as a government. Everybody expects that he, his needs are taken care more than others, right? And you do not know a broader sense of things. So I think that that sense of understanding is very much required, and every individual Indian, even if he is contributing to taxes, even if he's not contributing to taxes, or howsoever he's functional across in the ecosystem, he should understand and he should follow the budget. And I think budget is important from and every individual standpoint also. Even if you have, say, you have certain income from for yourself, you have certain expenditures of yourself, you should create a budget for yourself as well. So so I think it's a very important aspect, and a lot of people do not have basic understanding, which should be taken. Obviously, and every budget has constraints, right? You Nobody in the world has enough cash to be able to spend it fulfilling each and everything. So you have everybody has a limited budget to spend, and everybody has a limited uh, things that they can meet with those the cash that they have. So I think like obviously there are some political motives or some other motives with all these memes, and the lack of understanding is there. But I think that this understanding needs to be imparted, and all these interactions are very important to impart those understandings.
Got it. Got it. Anuj?
Abel, I can add some really informative thing to this. But there is a problem. I cannot translate it in English, so I have to speak in Hindi. तो
Sure.
हमारे ना नॉर्थ इंडिया में एक ना शादियों में फूफा जी के ऊपर बड़ा जोक चलता है। तो एक फूफा शादी में एक ऐसा कैरेक्टर होता है जो हमेशा नाराज रहता है। तो इसी तरीके से पिछले 7-8 साल से मैं बजट्स को बहुत क्लोजली ट्रैक कर रहा हूँ, एंड in every budget you will find the middle class upset, you will find the farmers upset, you will find the MSME upset, and they will say भाई हमें तो मार दिया, हमारे लिए कुछ नहीं किया. Salary class is always upset because they got exemption every time, and so these are common things. So इसके ऊपर बहुत मीम बनता है, but the essence is different, so that we will discuss later on.
Got it, got it, got it, got it. I think most of the memes that are also surrounding right now is, as Anuj said, the same reasons. So before we move on to the first question, we have a few comments in the chat. We'll go over them once and then we'll jump into the first question. So Karthik VS says, hi team. Hi Karthik, hope you're doing great. We have Venkateshan Rajendran saying, hi all, hi. Amanjot Singh Oberoi, straight into business, like right into the topic. Return expectation on HQRP, high dividend yield, and small cap compounder. Divam Anuj, would you have any words to say?
I think, the idea is to outperform the index. And usually what we see is whatever the GDP growth is, usually the markets give twice the returns on a yearly basis on considering a long-term average. Right? Say if say the GDP expectation is somewhere around 8%, the market expectation is somewhere around 16% on a long-term basis. If you invest for say 1 to 3 years minimum, right? If you are investing for 6 months or 3 months, it is very difficult to give a expectation of return, because short term there could be some volatility in the markets. So you have to consider at least a 2 years kind of a horizon, 2 to 3 year kind of a horizon when you calculate or you make your return expectation, right? And our idea is that if the index is going to grow at 2x the GDP, which is somewhere around 16-17%, we would be able to deliver an alpha over that. So that could be somewhere around 20 to 25% is what we can expect if you are investing in a disciplined manner, if you're doing SIPs and you are continuing to invest for 2 to 3 years.
Got it. Got it. Got it. Makes a lot of sense. So, uh, this actually, Hardik Parekh has the next question, and I think it's maybe a little closely related. But Hardik asks whether GST numbers are reliable. Since inflation is high, goods are valued high. So is GST? Question mark.
See, good. So see, GST obviously, see, there are two types of like growth that happens. One happens in because of the price, that the prices have risen. Today, I used to buy a commodity for 100 rupees. Tomorrow, the price has risen to 110 rupees. And on 100, a tax of 18% and 110, a tax of 18%, the price will be higher. The GST collection will also be higher. The second is because of additional transactions or additional volumes, right? If today I'm selling 10,000 units, tomorrow I'm selling 15,000 units, then there's an additional collection of GST, right? So we have to look at both the aspects. Obviously, a major component of the growth, what we have seen is because of the inflation. The inflation has been pretty high, and we expect it to be on the higher side, considering the liquidity that has happened, that has been like that has come to the markets. The overall liquidity, the commodity prices have seen inflation. So we will continue to see that inflation as a factor contribution to the overall revenues or overall GST collection. But see, what I would want to talk about is that, see, now the liquidity factor has already been has already been factored in, and the government is talking about reducing the liquidity, which will obviously try to deflate the inflation. But now, with the efforts like these, what the government is taking is going to actually increase the volumes of business, which will bring growth, right? And that actual growth, when that comes into the businesses, that will lead the next leg of value creation or wealth creation in the stock markets also, right? So inflation or high liquidity will be slightly on the backtrack now, and now we are moving towards economies or companies which will bring growth, and then will and because of that growth in the volumes, because of the efforts of government, because of the efforts of companies that they are taking, that growth in volumes will be what the markets will look at and reward.
Got it. So the next question is from Venkatesh Rajendran, who was, which small case would you recommend with less SIP investment, rupees perhaps 5K per month?
See, any small case that you go for, the SIP would be somewhere around 1/10 of the minimum investment value. So say if a small cap is say 40,000 rupees, you can do an SIP of 5,000 over there. So any small case which is below 50,000 minimum investment value, you can do SIPs.
Got it. The next question is from Nilanjan. Good evening, panel. Good evening, Nilanjan. The budget 2022 is inclined towards digital India plus Make India movement plus water infra to people and farmers. What is the future of renewable energy?
See, we believe that renewable is definitely the future, and everything is moving towards that. Even electric vehicles was in the focus. Government talked at length about it, and in the past budgets also, government has launched various policies, be it FAME 2, FAME 3, etc. And also on the renewables, the government has focused a lot. As you also pointed out, the government has focused on manufacturing of solar panels. So this is definitely the future. Why is this the future? One, the government is thinking about sustainability, right? You have to sustain. Other sources of energy are non-sustainable, like fossil fuels. It is pollution generating. Plus, if you are going towards renewable energies at scale, it reduces your import bill, And when and if it reduces, and we are already seeing that crude has reached somewhere around $90, and people are talking about $110 of crude. If I import a lot of crude, or if I import a lot of coal for generating energy, it will obviously impact my budget or my current account, right? Current account is the difference between what I export and what I import. So I will have to spend more on my imports, and it will impact my overall budget in a sense. One is that because of rising crude prices, and overall I want to reduce the current account deficit. Second, I want to ensure sustainability. And if I manufacture renewable energy at scale, my cost of components of renewable energy reduces, be it solar panels or any other source, which also the government is incentivizing to manufacture in India at scale. The overall proposition becomes uh, like it is the best thing to happen, right? So the government is definitely focused towards that, and this is the future. Modi ji also claimed that India wants to become carbon neutral in 2070, and obviously we are moving towards that. So I think that this is definitely the future.
Understood. So Nilanjan has a follow-up question, but I think it's already answered by Divam. Question with regards to investment in that sector. I think that was covered. Khan Patshala is asking ESG portfolio. I'm guessing it's if it's whether Green portfolio has an ESG portfolio.
Yes. So yes, so we started with our ESG portfolio around 4 months back. We feel that ESG as a theme, and globally what it has been, so that over the last 5 years, ESG as a theme has generated around 3.5% alpha on a CAGR basis on year over the last 5 years. And if you look at MSCI index, so MSCI index, the ESG companies have outperformed the other companies by 40%. So there's a huge alpha, and there's a huge investments that is flowing into these themes, because this is the future. This is where the new investments are happening. We see a lot of such companies like say a portfolio company, JSW Energy. So it is saying that whatever additional new investments it is going to do in renewable energy, right? So by ESG, you do not mean only environment, you mean social, and you mean governance. And it is like peer to peer. Like say, if I am an IT company and you are an IT company, both are environment friendly, both are non-polluting. But if I am taking an additional step for energy conservation, or for corporate governance, or for the society, I will be better rated on ESG. So these companies are command higher valuations in the market, and and ESG can be a theme across sectors, right? So companies which are better rated on ESG, we have seen in the past that they outperform their peers, and we are focusing towards those companies in this small case.
Understood. Ambrish Srivastav is here with a question. Ambrish asks, stocks which run higher occupies a greater weight than the original. So should we sell the running stocks and use the fund to average the losing ones? Should we do such rebalancing? And how frequently is it advisable? And what are the backtesting results regarding this?
See, okay, so I would say that if the stocks are it might happen that the winner stocks are doing great, and the companies which are not doing that great fundamentally, they are not doing that great. So every time selling the winner stocks and buying the loser stocks and averaging the loser stocks is not the right strategy. If you are buying, if you have some winner stocks and their valuations have exceeded your expectations, like they become overvalued. So every time you will not see a very stocks are undervalued, stocks are rightly valued, stocks get overvalued also in certain times. So when you feel that the stocks have gotten overvalued, you can gradually take out the money, and either wait for the right opportunity to reallocate the capital at reasonable valuations, or you can allocate it to stocks which have not run and the market have not realized the potential. But if you're reallocating capital, the company to which you are reallocating the capital, that should be fundamentally strong as well. You cannot reallocate it to only loser stocks with only the reason that the stock has not risen. You have to look at the fundamentals of that stock also. So I think being reasonable on valuations is a good thing, but you have to look at fundamentals also.
Understood. Aparna Kale is here with a question. Hi, Aparna. Could you recommend some small cases to purchase after budget 2022?
See, we have a small case which is high quality, right price, and that is exactly focused on what the budget talked about. The budget has talked about China plus one, PLI. There has been allocations over there. So this high quality right price, as although it is investing into companies which are fundamentally strong and are available at reasonable valuations, but as a theme, like this Atmanirbhar Bharat, etc., came a year and a half ago, and we are closely tracking that. So we believe that this theme is going to be an outperformer over the next few years. So this small case of ours closely tracks these developments, on ground developments that the companies and closely and adds companies which are going to be benefited from these developments. So I believe that high quality right price should be considered if you want to actually benefit from the announcements and developments that happened in the budget. Yeah.
Right. So next question is from K-pop. It seems somebody likes K-pop a lot. What do you think is the market, or is the market in a bubble? Is the market, I think the question that K-pop is trying to ask is, what do you think is the market in a bubble?
See, when I talk about market usually is like synonym of Nifty or Sensex. And Nifty is a representative of 50 top companies and Sensex 30 top companies. So you have to look at it from, so if you're talking only about markets, at large, the top companies, top 50, top 30 companies, I think that it is not the right thing. You have to look at the broader markets. See, now as we go into a slightly lesser liquidity regime, it will be more of a stock pickers market. So you have to understand where the value is. You have to understand where the opportunity is. You have to understand where the fundamentally strong business is. So if you are able to get, we continue to see a lot of fundamentally strong companies available at great valuations, and who are going to benefit from the developments. We see a lot of these type of companies in the broader market. So it will be a stock pickers market. You cannot say that the market is expensive. You will have to pick stocks. There'll be a lot of companies which will benefit from the developments that are happening post the budget and what the government is intending to do, be it on manufacturing front, be it on developing the infrastructure to be it on clean energy, electric vehicles. So there'll be a lot of companies which are going to be direct and indirect beneficiaries and are still fundamentally strong and are available at reasonable valuations. So considering only market as expensive is not the right way to look at it.
Understood. I have a question that is regarding the budget, and this is also for those who must have joined a bit late, but we're talking a lot about the budget. But there is one question, maybe if you can see from a very basic investor or a layman's perspective, and that would be, even now people are still taking in the budget, even before the few weeks before the budget, maybe even months or years. The last 1 year, people were always glued to their screens, and now they were very excited to see the new budget being announced on the 1st of every February. Now, why is the budget so important or so different from the normal schemes that are announced throughout the year? Why is the budget given so much of this attention? If that could be put out in a very layman's perspective, what would it be?
Yes. So right before the budget, first of all, there's a step-by-step like process that happens. Right before the budget, there's a economic survey that comes. So which tells us about the financial condition of the economy or the state of the economy, and and talks about certain projections. So which is very important to understand. So so it is a budget of that impacts everyone directly or indirectly, right? So first of all, we have to we that this economic survey tells us about the state of the economy and the key areas that the government are identifying to tackle, or the projections, right? Then it tells us about how much money a budget tells us about how, so it's like a revenue and expenditure. It tells us about the breakup of how much money is the government going to get from expectations of tax collection, other sources of revenue for the government, and how much is the government going to spend on various things. So government on a yearly basis spends on a lot of things, be it on defense, be it on capex, be it on social schemes, be it on pensions, salaries. So government spends on a lot of things. So it tells us about the allocation. So say if I'm getting 100 rupees as taxes or other sources of revenues, I am spending say 120 rupees on various schemes uh, and expenses. It tells me about the entire revenue and expenditure. It tells me about the state it tells me about the assets and liabilities of the government. So first of all, I as a citizen has the right to understand about what the government collects taxes from me. What is it doing with those taxes? How is it allocating for the welfare of people? So as a layman, I have to understand those things, and like I need to also understand whether the distribution of money, what the government is collecting, is happening in the right manner or not. I need to understand whether the government is not overshooting its budget and is not over borrowing, which can have an impact on my future. Like if the government is just to become populist, just for the sake of elections, overshooting its budget, like I have 100 rupees in my pocket, I go and spend 150 rupees and just to please everyone, and I'm what will I have to do for that? For additional 50 rupees I have to borrow, and if I'm borrowing that 50 rupees, I have to go I'm borrowing from my future income, right? So it might, if I'm over borrowing, it might also increase my interest rates for the future. So I have so all these things are very important, and I, being a citizen of India, have to understand those things. uh, uh, and so that's why I think it is very important.
Understood. So, understanding now, we understand why the budget is important. Why is everybody glued to their screens because of the budget? Why it has a lot of traction. And like you mentioned earlier in the beginning, Divam, Anuj, both of you can take this question. You said that every budget, it can't be perfect. Obviously, it can be a good budget, but it can also come with limitations. So, in a very small gist, if you could say, what were some of the hits and misses of this year's budget?
So I am like very gung ho about the shifting of focus from pleasing people by giving subsidies to empowering the economy. I think that if you spend on infrastructure, if you spend on if you do capex, if you upskill people, if you consider about sustainability, reducing current account deficit, all these things, you are thinking about the future, right? And you are not focusing on just giving subsidies to people to please them. So I think that has been that shift in thought process. And so if you are spending on capex, that gives the biggest GDP multiplier for the economy. So I think that has been the biggest hit for the government in this budget. The miss, I would say that there were a lot of sectors and a lot of small and medium enterprises which were impacted very which was impacted higher than the bigger companies. So bigger companies had more resources, had more usage of technology, and they were able to survive and they were able to thrive in these times. But the smaller entities, a lot of sectors, be it hospitality, travel, a lot of these type of sectors actually faced a lot of issues with continuous lockdowns and people not willing to travel out. So there they should have been given slightly more incentives for a shorter term to actually cope up and get back on their knees. I think there's some focus was lacking, and there should have been slightly more focus over there.
Understood. Understood. Anuj, if you'd like to add a few pointers for some of the hits and misses of this year's budget.
Yes, Abel, it was, very surprising for us because, this budget was coming right before the 5 states election, and these states, particularly UP, it is like a pre-board examination before 2024. So we were expecting that there will be some populist announcements in the budget. You know, you can either make populist announcements, or you can make announcements that will positively impact the economy. It was very bold on the part of government and finance minister and prime minister that they go with the intent that they have shown in the last couple of years, that is to put everything into the economy. Okay, so the economy is already in a very robust, very good growth path, and they tried to ensure with this budget that it continue to do so. And by not making any populist announcement, there was a risk that you know political parties, opposition will obviously criticize the government that they have not done anything specifically for farmers and middle class and MSME, etc. But it was a very good budget from the angle of economy and from the angle of stock market. But there could definitely be some more announcement, more announcements for textile sector and hospitality and tourism. I think they lacked government focus, and it was very much needed because even though textile is doing really great right now, but a little bit of thrust, like they have shown in case of infrastructure and solar panel manufacturing or river linking, etc. These kind of a little bit, some announcement on textile and hospitality and tourism would have gone long way, because both these sectors employ labor in disproportionate level than the other industry. So this could have been identified as a miss if you ask me specifically. Otherwise, it was a very good budget. I don't think there was much to do.
Makes sense. Makes a lot of sense. So now we have again a lot of questions have compiled up in the chat. So we'll go first to Mr. Bittu. So Bittu asks, hi Bittu. Bittu asks, dear sir, is weekly rebalance better than quarterly rebalance?
See, it depends on the type of strategy or investment philosophy you are following. If you are going for if you think that you cannot invest for a longer term and you want to trade the momentum, then I think a weekly rebalance is good. But if you are investing in the business, considering fundamentals, valuations, and for a slightly longer term for the business to rise and your wealth to rise, then quite frequent churn is not advisable, right? If you are churning your portfolio, like there was an ad that used to come that you are standing in a queue and that queue is not moving, and then you move to the next queue, and then you are stuck there, or that the other your queue starts moving and the other queue stops. So frequently changing the queue is not the right thing to do. You should, if you think that you have invested in the right business and you are willing to stay invested for a slightly longer term, I think not churning your portfolio frequently is the right thing to do.
Understood. I think this is the most relatable analogy that I've ever heard, because this happened to me last week. Not the churn in the stock, but moving from a different queue to a different queue. So thanks for that. The next question is from Hardik. Where do you see interest rates going forward? Is the central bank Will the central bank pose a threat to equity valuations going forward?
See, interest rates will move upwards. It will move upwards gradually, not that fast. And this has to happen because obviously the inflation is also to be targeted. So it will gradually move up. We are anyways in the one of the lowest regimes of interest rates that we have seen in many years in the past. Uh, uh, Even slightly moving upwards and gradually moving upwards is not going to have that much of an impact on the equity markets, because your if your inflation is say 6-7% uh, in fact it is more than that. If you look at the real inflation, if you talk about inflation of 6-7% and interest rates of 4%, if even if interest rate goes to 5%, that is still lower than the inflation. So the money will still move to slightly risky assets to actually generate alpha and at least beat the inflation. So money will also continue to flow. India is continuing to see concentration from China, where FDI is not moving to China, FDI is coming to India. So second is that money will continue to flow. Third, there will be slightly less liquidity because interest rates slightly moving up, but that liquidity will be compensated by growth. That is going to come with the steps that we have seen in the past, be it PLI, be it this budget, etc., etc. We will see growth that will compensate for the liquidity.
Understood. Now, Ambarish has a very good question out of curiosity. I'm not sure if you have the data with it right now, but Ambarish, just for curiosity, in your backtesting of HQRP, what is the drawdown experienced during the 2008 crash and the small cap crash of 2018?
See, I would give you data about 2020 March. So 2020 March, the mid caps crashed by somewhere around 39% or so, and our HQRP had fallen by somewhere around 21% or so. So we were outperforming the benchmark, which is BSE mid cap, by then also. So I'm talking about the Q4 FY20. So when we saw the COVID crash. The idea here in this HQRP is that we diversify it. We continuously evaluate with the run-up stocks. We actually keep on exiting, and we reallocate the capital into companies which are reasonably valued. The portfolio consists of 15 to 20 stocks, so it is very well diversified across sectors. So well diversified portfolio plus cushion of valuations plus cushion of fundamentals. These are the basic traits which helps us reduce the drawdown when it comes to these type of volatilities.
Understood. So the next question is from Rohan. Hi, Rohan. Hope you're doing well. Do you expect a liquidity crunch in the new fiscal? Retailers may pull out of markets due to high inflation and the reduced printing of the US dollar.
See, that's what I talked about. First of all, inflation is still higher than the interest rates. Interest rates, even if they rise, they will rise very gradually. The government cannot drastically increase the interest rates overnight. And governments have been very like they do not want, they're like facing both sides, right? They do not want internally to increase the interest rates, but they do not have a choice because the inflation is coming. But still, the inflation is higher than the interest rates, and it's going to be so. So the liquidity into slightly risky asset class, which where equities also fall, would also would continue, right? And second, I said that there is reallocation of capital. India is becoming more attractive, even if in the MSCI index, which tracks the global developing economies, India is getting more allocation from global investors. So the liquidity into Indian markets will continue. Third, we will see growth. So if I, as an investor, if my business is doing good, So if my business is growing at say 15-20%, my stocks will also perform well. Today or tomorrow, short time, there might be some volatility, but long time, if my company is growing at 15-20%, my stock will also grow even beyond that. So we foresee that a lot of growth is going to come with all these efforts that are happening. And when my business will grow, my stock markets or my stock prices will perform well. So you need not worry about the developments that are happening in terms of expectations of rising interest rates. That is, and also the expectation of rising interest rates is already priced in. Everybody knows that the interest rates are going to rise. So there's a common saying that buy the rumor and sell the news. So this expectation of rising interest rates is already priced in. So now we believe that when the interest rates actually start kicking in, the market should in fact go on the opposite direction.
Understood. That's a very interesting take on it. Arvind Natarajan has a question. Hi, Arvind. What kind of, oh, so this is related to HQRP, high quality right price again. What kind of portfolio is the high quality right price? I've been eyeing this for some time now, but couldn't figure out the asset allocation and strategy. Could you please explain?
So high quality right price, we invest in companies so we invest in companies with a philosophy of growth at reasonable valuations. So companies there are qualitative as well as quantitative factors that we look at while screening companies. When we look at quantitative factors, we look at factors like the debt. There should not be much debt on the company. The debt to equity should be lower than 2. The operating margin should be at least double digits. There should be historical growth in the business. So we look at certain qualitative factors while screening the companies. Then we look at quantitative factors. Then we look at qualitative factors. Qualitative factors like the management should be good. The corporate governance should be good. The company should be spending on its research and development, on its brand building, on its customer service, etc. The company should be taking steps which are going to ensure growth in the business over the next 3 to 5 years. So we look at quantitative as well as qualitative factors, and we create a portfolio of 15 to 20 such companies with the intent of multiplying your wealth over the next 3 to 4 years. So say if all these factors ensure that the business is growing at 15-20% on a year-on-year basis, and the valuations are reasonable, the management is good, and the future outlook looks good, my company is going to multiply your wealth over the next 3 to 4 years. So we buy 15 to 20 such stocks, and then we keep on reevaluating those stocks on a quarterly basis. So on quarterly filings, we talk to the management on a regular basis. We keep on tracking the progress. So like where we feel that that progress, that fundamental premise has changed, we might also sell that stock overnight. Because if you're creating a 15 to 20 stocks portfolio, 5-10 stocks will outperform. 5-10 stocks will 5 to 7 stocks will be average, and 2-3 stocks will not do that well or will not meet our expectations. So that's the benefit of having a portfolio of such number of stocks, and we keep on reevaluating the stocks on a quarterly basis and coming up with our rebalances.
Understood. Now, Manish Wagmare, I hope I pronounced your name correctly, Manish. If not, I'm really sorry. So Manish has this question. For long-term investor in the share market, what do you think? What are your views? I think what Manish is trying to ask is your views for a long-term investor in the share market, and maybe a few advice that Manish can carry out today.
See, for long-term investors, first of all, discipline is very important. First of all, you cannot shift your philosophy with change in markets. Like say, today some market is behaving like something like 1 year ago, you buy anything, the market was rewarding it. Today, we are expecting inflation. We are expecting, so some of the overvalued stocks are getting punished, and some of the undervalued stocks are still looking good. So So first of all, you have to identify a philosophy. You cannot change your philosophy every now and then. You have to be consistent and disciplined with your philosophy. Uh, Whenever you see a fall, so falling and rising is a nature of the markets. Markets can fall, say even 10-20% at a stretch. Markets might not might stand at a place and might not move up or down for a slightly longer period. There are different phases of the market, so you should not change your course at all the phases. You have to be disciplined. And when you see opportunities, like say if you have bought the right portfolio for you, and you see that the market has fallen 10-20%, consider, rather than panicking, consider it as an opportunity. So because if you have bought that portfolio at certain level with a conviction, and with saying that I will invest in it for the next 3 years, if say 6 months down the line the markets fall by 10%, you should not panic. In fact, you should do an SIP over there. That psychology will create a lot of difference, because you are investing for long term, and long term your short term movements will not impact you. Long term, only the company's fundamentals will impact you. If the company will is growing, your wealth will grow. So you have to, if you are saying that you are a long term investor, you have to look at companies fundamentals only. Then the short term news of inflation, China, interest rates, etc. will not impact. Only the company's fundamentals will impact.
Understood. I think this is a very like, even on a very grassroots level, this is one of the best advice anyone can give, because each time what I've noticed is when people are into stock markets, even in my own friend circle, when they see maybe one stock go down, they keep refreshing the page, or they keep thinking, okay, when will this go back up? So I think when you take in a long term sense, I think even for an investor like me, I think the biggest quality that a person should need is patience, and to be in the game, to have that willpower to be in the game. So thank you so much for that, Divam. Next question is from All in One. Healthcare sector के बारे में बताओ.
Anuj?
Healthcare is an essential service, and it will do good. And we see India, emerging as a medical tourism hub. So, kind of surgery that you get in US for say $40,000, you will get here in like 1 lakh rupees. That will be like 1/10 something of what you will spend in US. So we are seeing a lot of interest of foreigners coming to India for the medical treatments. That is a big opportunity, and also the coverage of insurance and with the organized sector, growing instead of unorganized sector. We see that demand from those people who are covered for their healthcare services. For example, who have insurance policy, that those people are increasing on a daily basis, and that will create a huge opportunity for the healthcare industries in organized sector, in private sector. So, I mean, there are a few good companies also, like Apollo Hospital or Max Healthcare. However, we do not cover these shares, and we are researching on those kind of companies. Also, we are considering diagnostic labs, but right now we are not invested in any share. But it is a good sector to be in, definitely.
Thank you so much for that, Anuj. The next question is from Kishan Gaur. Hi, Kishan. Why is the HQRP portfolio recommend a 5 to 10 lakh investment? Does it really matter, or what kind of difference does it make, if it makes a difference?
See, actually you can invest a larger amount also. The idea is that, see, if you have multiple people investing, the idea is to let everyone invest into the portfolio. And I think if you have, say, a higher amount, you can also diversify into our other strategies. So I think so this is a theme there. If you are investing 50 lakh rupees, you can very well go and do that. But I think if you have a larger capital, and I'm not sure how much of overall capital are you investing with us. So I would say that you should diversify. So that's the idea, mostly looking at how much average everyone invest. We want to ensure that everybody has gets the benefit out of it. So yeah.
Thank you. Thanks a lot. The next question is from Muhammad Usman Sharif. Now, Usman asks, Special 30 is the best performing strategy in green portfolio. Kudos. Do you have a similar strategy in small case too?
So see, some of the stocks are there in small cap compounders, but considering there are certain limitations with which we actually refrained ourselves from not having a replica strategy. One is that some of the stocks in that portfolio are slightly smaller market cap, and when retail investors invest in that kind of a market cap, sometimes it might get less liquid, sometimes it might get more volatile. So considering that everybody does not have that kind of a temper to actually uh, understand the volatility or understand the less liquidity, uh, we refrained ourselves from putting it on small cases, which is more for public at large. So that has been the primary reason for. But uh, a lot of the shares of Super 30 are there in small cap compounders.
Understood. Bittu says thank you, sir, to Divam and Anuj. Thank you, Bittu, for asking that question earlier. Pawan Kulkarni is asking the next question. Hi, Pawan. Hi, Divam. What should be the ideal expense ratio for the paid small cases? And is SIP the right way to invest to reduce the expense ratio?
So if you look at expense ratio of mutual funds, that is somewhere around 2.5%. And here you can invest any capital with the fixed charges that we take for a year, right? So I think expense ratio of 1 to 2% are not bad. See, and so it should be, if you are able to generate 15-20% returns, I think even paying 1 to 2% kind of an expense ratio is not bad. So ideally, in our small cases, what you should do is do SIP on a regular basis. So as frequent SIP as you do, the better it is. And whenever you see a fall in the market or any special kind of a situation, extra fall in the market, you should slightly enhance or do an extra SIP at that time. So SIP is the best way to invest anytime. Even in the PMS, we stagger the investments. So like say if I want to invest 100 rupees, I will not invest 100 rupees at once. I will stagger it. I will invest it in tranches over the next 2 months, 3 months, etc. So I think SIP is the best way. And if you are able to continue doing SIP for a longer period, nothing like it.
Understood. Now, for all the viewers, we have some exciting news also to share. We're also giving out Green Portfolios, giving out a coupon code, and the coupon code is NY15. Divam, Anuj, if you'd like to give away the coupon code and talk about this offer.
Yeah. So for our investors, if you are subscribing to any of our small cases, any of Green Portfolio small cases, you can avail this offer and get 15% off on the subscription fees, and you can use the code NY15.
So I think this is the, with the budget and everything, this is the advent for a lot of people to start investing. So you can start investing with Green Portfolio with the coupon code, of course. And I think we're running a little short on time. I think we're ending towards the clock. But this question, I think, I believe a lot of people have this question on their mind because it is all the trend now. So this question, the question I had is, the government has finally recognized cryptocurrencies and have announced policy for the same. What effect do you feel this will have on the retail investors in the equity market?
The cryptocurrencies, if you look at, see, we are a firm believer in blockchain, and we believe that over a period, a lot of these country specific currencies are going to come. Like India said that we are going to have a digital currency. Likewise, all the developed economies are considering and working towards their own currencies. So if any project or token is basis some blockchain project which has some underlying, you should have some underlying in any asset. Like just speculating on the value of anything, I think it's not sustainable, right? So if that currency or token or whatever has some underlying business and underlying blockchain like business with it, then that makes sense. But if it is only a currency and it is and the use case is not there, uh, when the currencies from India, US, China, all these type of currencies come, which will be recognized, these type of currencies will not face a fall, right? So you should be very cautious and in understanding what is the underlying, rather than just going and speculating and just listening to your friends that hey, this is going to do well, just invest. You should understand what it is and what is the underlying business with this. So government has not yet recognized it. Government is saying that they are going to tax the profits on it, and that is also taxed on the highest slab. 30% you don't get a set off of your losses. There's a TDS that gets cut on your investment. So it is putting taxes, but recognizing of cryptocurrency, that is going to take time. I think, but recognizing of blockchain is definitely in place, and government has recognized, RBI has recognized some of the blockchain projects, and that will definitely be the future.
Understood. So Aditya is, differing from your opinion. Aditya says no, 2.5% expense ratio is a lot. Would you like to add to that? Would you like to add any comments to that?
See, it depends on, first of all, what is my objective of investing? It is to beat inflation. First of all, I am investing 100 rupees. I have to ensure that at least I'm able to beat the inflation, say 7%, 8%, whatever I consider. Second, what that does is that maintains your purchasing power of the money that you're investing. Second, there is expense. Like say it is say 2%, whatever. So if 8% is inflation, 2% expense ratio, at least I have to earn 110 rupees. And if I'm earning more than that, that is an alpha, right? So if I'm able to generate that kind of a return which is more than the inflation and more than the expense ratio, and I'm able to consistently maintain that kind of an alpha on a consistent basis, I think it's not bad, right? You are paying from the extra profits that you are generating, and see, this is the standard. See, obviously, as a research house, if you where does the expense ratio goes? It goes for research and the efforts that we make to bring you those kind of small cases and those kind of research to you, right? If it is generating profits from you, you are paying only from the profits, and if you are consistently able to generate that, I think it's not that bad.
Understood. Mayank Malavia asks how to invest in a financial product, its name, URL, etc. So Mayank, you can please check the description box. There is a link to Green Portfolio Small Cases, and you can check out all Green Portfolio Small Cases at the Green Portfolio microsite. And if you're starting to invest, you can also use the coupon code NY15. And Madhunya, hi Madhunya. Madhunya says, make it a 25% discount going by the budget, no relief for the middle class. Do you have any comments, Divam, Anuj?
What do I say on this?
Yeah, I think Madanya, please keep a track on Green Portfolio. Green Portfolio consistently gives out. I think even the past couple of years, Green Portfolio is consistently giving out coupon codes. So keep a very close watch. And I don't think coupon code should be an excuse to invest in Green Portfolio small cases. But that's up to you. And but again, I think we can take it with a bit of as a joke. So thank you, Madanya, for that. Bari Kukani asks, is this code applicable for renewals?
Uh, I think it is. If not, we'll get back on that. I think it is applicable.
So, Bari, if you have any questions, please reach out to either the small case team or the Green Portfolio team, and we can.
Or you can also email to smallcase@greenportfolio.co.
So that is smallcase@greenportfolio.co. So now that the time is running out, we've had a lot of fun questions. Thank you so much, audience. But unfortunately, we have to wrap up. We have some fun questions, questions about small cases, the budget, and even the coupon code. And I hope it was, very informative. But on a closing note, for the final question, if I would ask, how can our retail, how can the retail small case investors benefit from this budget? And where do you think the investors, the small case, retail investors should actually focus on?
See, retail. So first of all, you have to think about the themes that the government is focusing on. So it is the government that is driving businesses and that is driving the future. They are spending in certain areas where they feel will be beneficial for the country at large. So you have to look at where the thrust of the government is. The thrust of the government is towards infrastructure, towards PLI, towards manufacturing, towards renewables. So where the thrust of government is, you should go by that trend, right? You should identify opportunities which are going to directly or indirectly benefit from this thrust. And again, you have to be disciplined with your approach. So if you are investing in those themes and investing with a discipline, as a retail investor, you'll definitely make a good wealth over the next many years.
Got it. Anuj, would you like to add something?
I always say that I think this is the best time to invest in Indian economy. So, I mean, whenever a person is investing in any stock, he should invest with a focus in mind that he's investing in Indian economy, which looks very bright from here. So, but the fundamental principles remain the same. That there should be diversification and you should have a long-term attitude. It's not that when your wealth is growing, you are a long-term investor, and as soon as the market sees a correction, everybody turns a short-term investor. They say that, okay, enough of long-term investing. Now I am a short-term investor. So avoid these kind of sentiments. And the green portfolio, all the products of green portfolio in small case are well diversified. They are continuously researched. So we continuously track the fundamental changes there, and we take actions based on that, including the valuation part. So I think just have a right attitude toward investment. This is not we are not gambling here. We are creating wealth for a long term and for a lifelong basis. So we want our investors to stay long term into Indian equity. Indian economy is very bright from here, and all the best.
Got it. So I think unfortunately we've run out of time, but it was an amazing conversation. Got to learn a lot, got to analyze the budget 2022. I mean, if we had more time, I'm sure the expertise and the advice coming from both of you are never ending, and we could keep learning throughout the night. But thank you so much. I can't appreciate how amazing it is. It's not even a weekend, it's a weekday. Both have a lot of work to do, and I can't stress this enough. Each time on every call, I keep saying the same thing. The dedication that Green Portfolio takes to be here and to educate the viewers means a lot. Thank you so much, Divam. Thank you so much, Anuj. It's not an easy thing to do. I know, like, 7 p.m. staying here, coming here and talking to the viewers and answering those questions. It's not easy. And thank you so much, viewers, for pouring your questions out so that we can all learn together. So thank you so much, Anuj. Thank you so much, Divam. And before we close off, I'll have to say, if you'd like to see such more videos, more discussions, please like, share, and subscribe. And if any of your friends or family members haven't seen this video live, you can share the link with them so that they can watch the live streamed webinar as well. Thank you so much, and look out for more videos. Thank you so much, Anuj. Thank you so much, Divam. Have a great day.
Thanks, Abel. Bye.